In silver this morning in Shanghai, the market opened up, limit up, and opened up at $35.38 an ounce. But on the Shanghai Futures Exchange, it opened up 8% limit up. And that's why they say there's no bull market like a metals bull market, because it's the only one where the higher the price goes and the freakier the world gets only solidifies your resolve and your grip on I'm not selling that back for dollars. Are you out of your mind?
It's not like the public even recognizes what's going on, because 30 means a lot to us, right? Because we follow the market. 99% of people have no idea how much silver is, and if you told them, it wouldn't mean anything, right? Like, what do they have to do with it? You know, we have a long way to go here. On the one hand, and on the other hand, maybe not so long.
Today, two financial experts, Andy Schectman and Rafi Farber, explore the recent surge in silver prices, a milestone that saw the metal break the $30 mark, and the broader economic implications that are shaking the precious metals market. In this video, we'll see the implications of silver reaching almost $33 today and how the public is starting to wake up. Silver's rapid ascent past $32 an ounce has caught the eye of investors and analysts. But what does this mean for the economy and for those invested in the metals market? Smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily Educative Metals recap. Enjoy the episode.
Deficits will get bigger, interest rates will rise further. And, you know, the term in economics, Gibson's paradox, which traditionally speaks to the inverse relationship between real interest rates and the price of gold in particular, in this case, seems to not be as relevant in an environment where gold and silver prices are not aligned with their usual drivers, in particular, the 10-year Treasury yield and strong dollar. They just want the metal. And I think India just wants the silver. China just wants the gold. Of course, I'm generalizing there. I think China's a big buyer in silver as well. But, you know, you can, well, and let's say there's empirical evidence to that showing that in silver this morning in Shanghai, the market opened up, limit up, and opened up at $35.38 an ounce. But on the Shanghai Futures Exchange, it opened up 8% limit up on Monday morning. And so when you talk about the drivers that typically would spell a reversal in the price of gold, a strong dollar, strong interest rates, in this case, and an inflationary agenda that seems to be running out of control, which would speak to higher rates for longer. It doesn't matter. I think that's really what's different this time, is that the pursuit of non-dollar denominated liquidity is outpacing the demand for dollars in U.S. Treasuries.
In terms of fundamentals, it's becoming clear that that consumer prices are going to keep going up higher and higher and higher, and sometimes at different rates, but they're not going to stop going up. And with rates at what, 5.5% or whatever they are now, maybe at the point where there is no interest rate, where consumer prices stop going up. You know, once you have the fiat system so heavily based on debt assets, right? If debt and currency are the opposite sides of the same coin, then the more currency you have, the more debt you have to have, since all the currency represents debt anyway. So once it's so saturated with debt, then when you bring down the value of debt, it's going to hurt the value of the currency rather than help it. And that's the paradigm shift that most people can't, it's hard to step into, because it reverses thinking. And I think that's why silver is really going up. And again, it's not really going up. It's just the dollar going down. The silver is just a measure of how the message of the end of the dollar system is resonating with the public rather than with banks or with the rich people, right? Because they're not the ones who are going to buy silver and when they get nervous. It's going to be the public, and we're just starting to see that. It's not like the public even recognizes what's going on, because 30 means a lot to us, right? Because we follow the market, but 99% of people have no idea how much silver is, and if you told them, it wouldn't mean anything, right? Like, what do they have to do with it? So, you know, we have a long way to go here. on the one hand, and on the other hand, maybe not so long. It's hard to tell now when things get this unstable.
Yeah.
In today's news recap, silver outperforms gold with over 25% surge this year. The report also forecasts growth in Asian markets after U.S. stocks recorded a positive performance. Silver and other metals experienced significant price increases this year, with silver gaining more than 25% since the beginning of 2024, stated Saxo Bank in its latest market report. So far this year, silver has outperformed gold and ranked as one of the top performing major commodities. On Monday, spot silver gained 1.51% to $31, rising above the $30 key level. In addition, the Bloomberg Commodity Index is rising towards its third monthly increase for the first time since 2022, when inflation was over 8%. In May alone, the index has seen a 4% increase, setting the stage for its strongest performance since July 2023. Oil prices maintain gains. In addition to gains in bullion prices, oil prices also maintain their weekly gains as geopolitical tensions heated in Russia and the Middle East. Brent crude hovered near $84 a barrel after achieving its first weekly increase this month. Meanwhile, West Texas Intermediate remained just under $80. Now we'll show you the best clips, but first, smash the subscribe button and share this video with a gold bug. Enjoy the episode.
And then all these countries, they have all these dollars, not only dollars, but they have dollar derivatives, right? If the dollar is crashing, very simply, look, if let's say silver is crashing, right? So then SLV goes down, and then options on SLV, short-term options, go way, way down. And AGQ, the 2 times ATF, goes way, way, way down. So the same thing with the dollar and bonds. If the dollar is really crashing in real value and you can't buy anything with it, so what are all these countries with a whole bunch of dollar derivatives, bonds, going to do? They're going to fall even faster. So they're going to send them all back. And then you're going to have this sudden wave of inflation or God forbid, hyperinflation. It's going to happen. And then what can you go back to? You can't go back to any currency. So you have to go back to silver. So I think for a brief period, I don't think it's going to last very long, but for some amount of time, right, you're going to have to exchange coins for goods and services. You have to take it out of your pocket and give a weight of silver, plop it down on a scale. They're going to have to weigh it and test the coins for a little bit of time, and you're going to have to get stuff that way. And that little bit of time is going to encourage so much silver to come out from people like us to spend as much as we can and whatever we can find, right? Because it's the economy begging for money, for a way to divide labor. So in terms of where the silver merchants come in, what would happen? Like they have all this silver inventory or whatever it is, and then people are looking for silver. So then you just flip the cards. The banks that were trading around fiat, they go broke. And the companies that have all the silver inventory, they become banks, right? It's the same system. It's just flipped. I just don't know how that would actually happen logistically, how it would be possible.
Now, Andy explains to Rafi how his firm, Miles Franklin, may become one of the biggest banks in America if there's a big recession.
That's what happens. The little by little, the logarithmic decay, the chipping away at the hegemony of the dollar, all of these countries that are not Western friendly in the Southern Hemisphere chipping away at the settlement status of the dollar, trading in local currencies, replacing those local currencies with gold and oil in terms of excess reserves that normally would wind up in treasuries. That little by little by little by little, the debasement of the settlement and the reserve status of the dollar is growing much more profoundly. And I think this is a situation where when you talk about rising prices, look, if you spend $100 every second of every day, 24/7, it would take 1,970 years to print just as many dollars as we've spent in 1 year, over $6 trillion or created in 1 year. The level of inflation that was created by money creation, the classic definition of it, is exactly what we should be expecting. And that hasn't even flushed its way through the system yet. the debasement or the falling dollar is a reflection of the weaponizing of the dollar, is a reflection of the fact that these countries no longer trust us. It's like a glass broken into a million pieces. When you break it, you can't put it back together, at least not very easily. And so what you are seeing is a byproduct of the same time of the ramifications of massive money creation, most of it done over the years where interest rates were near zero, creating huge distortions in asset prices. The end of it is rates were still rising. Well, they were still creating tons and tons and tons of money, which is going to fuel the inflation. And as rates rise, maybe that we head towards that stagflation. But the point of it is that I think there's a disconnection now, whereas in years past, everyone wanted dollars, everyone wanted treasuries, everyone wanted to be part of the American system. And that system no longer, I think, is inspiring as many participants as it once were. So yes, I see this exact same way that Rafi does, maybe hyper stagflation, higher prices, higher taxes. What did the knucklehead say? If he wins again, he wants to raise capital gains to 44.5%. He wants to raise income taxes. He wants to impose a mandatory tax on unrealized gains for the very wealthy, higher taxes, higher inflation, little or no economic growth. And I do see a time where the world finally, that all at once moment triggers, and there is a dumping of dollars, there is a dumping of treasuries that accelerates, not just what we've seen slowly and methodically and orderly, where China has gone down to 750 billion from over 2 trillion, almost 3 trillion. That's the little by little by little. The all at once hasn't happened yet. But what I do think, when the all at once happens, it will shock people. Like to Rafi's point, no one knows that silver is over 30 unless you're in our camp. And it's a very big deal for the people in our camp. Most people wouldn't know a silver dollar if it fell on their foot, or the ramifications of rising silver, what it really means, or massively rising gold and de-dollarization. All of this stuff we focus on, the public is asleep. And so I see the exact same thing: higher prices, higher yields for longer, and continued de-dollarization and de-treasurization that we continue to foster. Where Janet Yellen has the nerve to tell China, if you give 1 penny to Russia to aid their war machine, we're gonna sanction your banks, your companies in Beijing itself. Don't worry that we've given 200 billion to the Ukraine with no congressional oversight. That's our business, and we're the world reserve currency. This is not settling well with the Southern Hemisphere. So yeah, I think that's exactly what will happen now. To your point, what does it look like? Who knows? I mean, yeah, I think it won't last forever, but there could very well be a time where things of value are used to barter, because who's going to want dollars in an environment where no one wants to hold them for any significant amount of time whatsoever? So yeah, I don't know how it all works out. I don't know if the companies like mine become the banks, because quite frankly, what I really see happening is that, Rick Rule keeps saying it, and he said it again the other day. From the Harvard Endowment Fund all the way down to Joe and Jane six-pack, you have a 0.5% allocation. If, pardon my French, the shit hits the fan that bad, which awakens the collective, realization, the collective consciousness that the realization this is real. And if you are not a contrarian, you're destined to be a victim. If that just increases to 5%, that's a tenfold increase. So the ability of a company like mine or this industry to be the bank quickly ends in an environment where, just like anything else in this country, inventory is just in time. And when you run out of available inventory, well, you got to order from the mints, of which 3 of the 5 major mints around, or 4 of the 6 major mints around the world are across the Atlantic Ocean. And so it's not an easy deal to where, you get an awakening by the public.
Today's discussion on the dynamics of silver prices and their broader economic implications is just a glimpse into the complex interplay of global finance and market trends. If you found our analysis helpful, don't forget to like, subscribe, and click the bell icon so you never miss an update from us. As we continue to navigate through these volatile market conditions, stay connected with us for expert commentary and strategic advice that can help guide your investment journey. Whether it's precious metals or the latest market disruptors, we're here to provide clarity and perspective in an ever-changing financial landscape. If you like this episode, watch this video right here because it's a perfect fit for you. I see you on the other side.